Hello and welcome to AI Market News by LM. So here's a real head scratcher. US stock markets are absolutely soaring, getting super close to all-time highs, and pretty much erasing all the losses from recent global conflicts. But how? How can the market be this optimistic when the world stage still looks so tense? Let's break down what's really going on behind this incredible rally.
Okay, just take a look at this. It's a sea of green right across the board. The Dow and the S&P 500 are both having a great day, but the real star of the show is the NASDAQ. I mean, it's on track for its 10th straight day of gains. We haven't seen a winning streak like that in ages. It tells us there's some serious confidence building, especially in tech. Right, so this is the big question, isn't it? How is the market just shrugging all of this off and pushing higher and higher? Well, it turns out the answer really comes down to two major things that have completely flipped the script on market sentiment. First up, let's talk geopolitics, because what we've seen is a really dramatic U-turn, a huge swing away from fear and right into a surprising new sense of, well, hope. A huge wave of optimism is washing over the markets, and it's all being kicked off by these reports about potential peace talks between the US and Iran. Now, nothing is confirmed, but, for investors, even the possibility of dialing down the tension is enough to spark a massive relief rally. Hope is a powerful thing on Wall Street. And you can see this optimism having a direct impact on the energy markets. I mean, it wasn't that long ago that tensions were so high, we were all watching WTI crude oil get dangerously close to that $100 per barrel mark. That was a scary prospect. And now, look at that drop. As these hopes for a ceasefire have started to build, oil prices have backed off in a big way. That eases a major point of anxiety for the global economy, and of course for all of us at the gas pump. But falling oil prices, that's only half the picture. The other big reason for this rally came from some really unexpected and frankly very welcome economic news right here in the US. So this is the Producer Price Index, or PPI. It's a big deal for tracking inflation. And what's really important here isn't so much the year-over-year number, but the monthly one. See, economists were bracing for a 1.1% jump. Instead, the actual number came in at less than half that. That's a huge miss. And in this case, a really good one. It suggests inflation might be cooling off faster than anyone thought. So why is this such a game changer? Well, it all comes down to the Fed. Investors are now betting that this softer inflation data gives the Federal Reserve some breathing room, a reason to maybe not be so aggressive with hiking interest rates. And that comes one of the biggest fears that's been hanging over the market for months. So we have these two really positive things happening. How does that actually change the mood on Wall Street? And I mean, how can you even measure something like market-wide emotion? Well, one of the best tools for the job is the Fear and Greed Index. You can think of it like an emotional barometer for the market. It takes 7 different indicators, mashes them together, and gives us one simple reading. Are investors acting more out of fear or more out of greed? And what it measures is fascinating. For instance, on the fear side, it looks at the demand for put options. Those are basically bets that the market is going to fall. But on the greed side, it tracks demand for high-risk junk bonds. When investors are snapping those up, it's a super strong signal that they're feeling greedy and willing to take on more risk for a bigger payday. And right now, one of the key parts of that index, the VIX, also known as the fear gauge, has just plummeted. It's basically back to where it was before all this recent conflict started. That is a massive signal that fear is just evaporating from the market. Investors are feeling confident again. This new appetite for risk, it's not just contained to the stock market. We're seeing the ripple effects spread out across the currency and bond markets too. So in the world of currencies, things are actually looking pretty stable. The euro is holding its own against the dollar, and the dollar-yen is kind of stuck in a tight range. It's almost like traders are taking a quick breath to see what happens next.
But the bigger story here is really about the US dollar. Normally, when there's a crisis, everyone rushes into the dollar for safety. But now, with the chance of peace on the horizon, we're seeing that whole safe haven trade unwind. Money is flowing out of the dollar and back into assets that have a better chance for growth, like global stocks.
At the same time, over in the bond market, the yield on the 10-year Treasury has ticked down a bit. And that's a direct reaction to both of those things we've been talking about: easing geopolitical tensions and that surprisingly cool inflation report.
So it's pretty clear the market has baked in a whole lot of good news. But is this optimism going to last? Let's take a look at the week ahead and see what economic data could either pour fuel on this fire or, stop the rally dead in its tracks.
Looking at the calendar from investing.com for April 15th, we've got a few key reports coming down the pipe. We'll get a read on manufacturing and the housing market, but honestly, the one everyone's going to be watching is that crude oil inventories report. After the wild swings in oil prices, that number could really make some waves.
And that just leaves us with the million-dollar question. Is this rally built on a solid foundation, or is it all just fragile hope? The market has clearly reacted with excitement to the idea of peace and cooling inflation. The data coming out next will tell us if that hope is about to become a reality. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.